My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey, welcome back, folks. Today our special guest zooming in from sunny Florida is Mr. David Jacobs. And David has quite a bit of experience in real estate on the limited partner side of things, investing in syndications with apartment buildings. And more recently, David and his partners are switching gears, going from more of the passive investing side of things into the active investing side of things. And they're focusing on RV parks. That's what they really want to get into. So today we're going to have an interesting conversation about making that transition from LP to GP with David Jacobs. Welcome to the show, David.
Yes, sir. Thank you for having me on.
All right. So give me a little snapshot of what does real estate investing look like for you today? What are you involved in on the LP side of things? And what are you looking for on the GP side of things?
Yeah, we'll start with the LP stuff. Really just right now, I'm more on the non-accredited side, just given the income restrictions that you have. So I'm limited in that aspect. So I have to find like your Grant Cardones or your people who do that for limited partners. So that's where I have limited, or I have invested that way. And then GP side has really been my main focus the last year and a half. Taking courses, training, mentors, and as you mentioned earlier, just really focusing on that RV park asset class. Initially, I started looking in the apartments, but I kind of found that RV park class interests me a lot more. I feel like there's a lot more growth in that aspect. So that's really where my focus has been the last year and a half.
Okay, well, tell us why. Why do you prefer RV parks versus, apartment buildings?
Yeah, absolutely. So with me being in Florida, as you mentioned, and my background in insurance, as everybody knows, insurance kills a lot of deals, especially with apartments, especially here in Florida. And plus insurance just everywhere is getting more and more expensive.
Yeah.
And we had looked at a couple apartments and we got our insurance quotes and that basically killed our deal for us.
Really? Wow.
Yes. So the mentor I had met, he was actively in RV parks. So I kind of started looking into that and I didn't know too much about it. So I just kind of went on LinkedIn, started posting stuff, went on Crexy, just kind of what everybody kind of does to kind of get going, and just started making connections and getting more and more RV parks sent my way, and kind of got more and more comfortable with the underwriting, what looks like a good deal, what doesn't look like a good deal. So that's really how I got into the RV park asset class, was kind of really the insurance kind of turned me away from apartments.
Okay, so insurance is a lot cheaper on RV parks. What else? Why else besides cheaper insurance appeals
Um,
to you?
I think with RV parks as well, you can really mix things up versus, I guess you could say, with apartments. You can have your weekly stays, your nightly stays, your monthly stays. So here in the Southeast, you can get really creative with it. I guess even in the Midwest too, where we're kind of looking to is, but here in the Southeast particular, you have your snowbird season. So which usually starts
Now,
October, yeah,
yeah,
now through about April, May, give or take the time of the year.
yeah.
So what you can do as a business plan is cater it towards maybe your majority of your park being catered to your snowbirds. And then leave some
So
space.
longer term stay type things.
Yes,
Yeah.
correct. Yep, on a monthly stay basis. And then you leave 15-20% or whatever you decide as a business plan for your transient folks. And then as things start to change come summertime, you kind of switch gears and make it more focused heavily on your weekly and your nightly stays, because you get a lot more bang for your buck that way versus your monthly stays. But you can also still keep people who prefer to stay there monthly as well. So you kind of just play it by year. So that was one aspect that I really liked about it. And then I guess just if I ever want a vacation, go to the RV park and go hang out for a little bit. So that was another interesting aspect about it.
Well, plus you got a lot less doors and toilets and
Yes.
tenants, I guess. You got guests, you do have tenants, but not like an apartment tenant
Yes.
kind of thing.
Yeah. Your overhead costs are definitely lower. One thing I have found though is property management. A lot of apartment complexes that have property management, they say they can do RV parks, but it's not really the same type of property management as
No, it's
for
completely
an
different.
apartment complex. So that's
Yeah.
that's also the difficulty of getting that as well.
What are some of the challenges with RV management that you've seen?
Um, in my limited experience, it's, I guess, just the constant overturn and making sure the sites are clean when people leave, checking in and checking out versus if for an apartment, they're there for a year or 6 months, but typically a year and they check them in, they get the monthly rent and that's kind of basically it, just make sure they don't cause a ruckus. But RV parks, like I said, especially for the transient folks, you've got to stay more on top of it than just what you would do for, I guess you would say, for an apartment complex.
So it'd be a little bit more similar to short-term rentals, basically, is
Yes.
what this is really is, right?
Mhm.
Short-term and
Absolutely.
mid-term type rental situation.
Yep,
So
absolutely.
are there companies, are there management companies that specialize in RV parks?
So what I have gathered is I think a lot of people when they first start out, excuse me, they go and try to find a third party management company. But then once they kind of understand how it works on their end, they end up just doing it themselves.
Mm.
So it's kind of a kind of a give or take. I haven't found any that we have really liked, but anybody I've wanted to partner with on some deals that we've looked at, they already have somebody on their team that would be willing to do it. So we haven't really had to look too far for a third party management company.
Okay. Now, for finding these kind of RV park deals, what are you guys finding is working for you for doing lead generation?
Um, really building relationships. It's probably a very generic answer, but building relationships with your brokers, letting them know that you're serious. I'll be honest, when I first started looking at it, when I didn't know too much, I would just say, hey, sir, this doesn't work. Like, it doesn't meet our criteria. But as I kind of gave them more and more in-depth answers, like our purchase price, the sites we're looking at, if we're looking for more mom and pop, seasonal, et cetera, and gave them more feedback, they understood exactly what we were looking for. And if we give them honest feedback on what we found with the park, well, maybe this doesn't make sense of what they are underwriting for versus what we're finding. You kind of build that rapport and they kind of learn to trust you and understand what you're looking for. And so that's led to some relationships that I have built with a couple of brokers, and along with another partner on my end as well on our team.
And what would you say are some of the challenges with taking down a RV park deal versus, let's say, a multifamily property?
Absolutely. The biggest challenge that I have come into thus far is still traditional bank financing. With it, it's I feel like is still focused on the apartments because they understand how that asset class works. I think RV parks, mobile home parks, it's that door is getting kicked down a little bit. Um, so that would be the biggest thing. And then getting brokers and sellers understand that depending on what your NOI is, what you're advertising it is, you're probably not going to get bank financing, and then kind of doing the seller financing route for them and presenting them like, hey, a, a bank's not going to is not going to lend on this. We need to entertain a seller financing type of deal. And then also getting to realize a reasonable price of what their property is worth, or a cap rate they're trying to sell it at. That's another issue we've been running into recently.
I can see why the banks would have a bit of a challenge getting their head around this compared to what they're used to financing. Because I mean, at the end of the day, if your RV park is empty, it's a piece of dirt with
Yes.
some pads on it and an
Yes.
outhouse here or there, the
Yep.
volleyball court or whatever. And it's like, what do we do with this now? So I can
Yes.
kind of get their point of view. There's not a lot on that piece of property that ties in that intrinsic tangible value for them.
Mhm.
Business model makes nothing but sense, but that's not how they think. So yeah,
Correct. Yep. As you know, it comes down to the numbers and
Mhm.
and it's harder to guarantee, I guess, in an RV park versus an apartment because you can go based off occupancy reports. Occupancy reports for an RV park it can be hit or miss. It's not
Yeah.
the same as it is in a city where on average the past
Plus, it can be fudged. It can be
Correct.
fudged so much easier, right? So that's,
Yes,
yeah.
yep, exactly. You can have, which we've run into before, where Mr. Property Manager might be pocketing some money for cash when people pay in cash. So like the NOI could be like, as you mentioned, fudged. So
Yeah. Yeah. David, where are you and your partners going over the next year as we're wrapping up 2024? What are the goals for 2025?
yeah, 2025. Hopefully get this RV park that we submitted our in the second round, our LOI accepted and get moving on that. We got a 45-day close in our LOI and hopefully we can knock that out. We've got another one coming down the pipeline. So honestly, our goal is at least to get pending beginning of the year, get that first one knocked out of the way, and then hopefully another 2 to 3 by the end of 2025.
Exciting stuff. If people want to connect with you and find out more, where should they go, David?
Yeah, best place to find me right now is LinkedIn. Obviously, if you reach out to me on LinkedIn, down the road, we'll have more of a better way to connect with myself and my team, but LinkedIn is the best way to reach me at this point.
All right. So they just look up David Jacobs. How do they know which one it is?
Yeah, David Paul Jacobs. I know it's very generic, but yeah, David Paul Jacobs is able to find me.
Awesome. David, thanks for being on the show. This has been fun.
Yes, sir. Thank you.
All right, everybody. See you on the next one. Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now, at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.